Let's cut across to the bankers meet where Chanda Kochar currently is talking.
Mr. Chaudhary, just a question around the asset quality. The second part, along with the provisioning, is what the RBI is saying on this information sharing issue. What was the discussion there? What exactly is the RBI seeking from banks? Because they're saying that it has to happen before Jan 2012, otherwise fresh loans can't be sanctioned. What exactly are they saying here?
I think it basically stems from the fact that RBI has stipulated that if you reduce the rate of interest even in the interim, supposing a company is contracted to pay 12% and now you reduce it to 10.5%, they say you take the NPV loss. Now NPV loss is perhaps easy to stipulate but more complicated to calculate. So that is why they are saying that okay, let us know that what is the likely impact of the restructured book and all that. So we'll come to a simpler formula rather than this complicated formula of NPV loss. So possibly this move towards 2.75% on restructured asset is coming from that direction, because earlier the Mahapatra committee had recommended 5%. So it has been moderated down to 2.75. So we said it is much easier for everybody to understand and implement if it is a given percentage of X rather than keeping it as a part of an elaborate mathematical formula.
You have spoken on the matter. How are you placed? I think you will need the money for the CRR cut.
CRR cut gives us another 225 crores on 11 lakh crore base. So 25 basis points would be about 2,750 crores, and if you put 8% price on that, it comes to slightly above around 225 crores. But what will be required to provide our restructured book is 35,000 crores. So another 0.75 would be about 300 crores. But that's not very significant, because for the whole year we had budgeted for a 10,000 crore provision. So even then it is not very significant, and the second quarter results are not yet out. But in our case, the NPA position looks better in Q2 than in Q1. Rates falling, yes, I think our ALCO would meet in a day or two, and maybe we'll assess our October net interest income. And if there is nothing worrisome, because we have greatly benefited by rate cutting, because now the growth is coming in retail segment, which is very rate sensitive, and ever since we have dropped our home loan rates, our daily sanctions have almost tripled. Home loan sanctions used to be 65 crores, now they are about 150 crores per day.
Sir, since we have the rate cut will happen across the board, or in particular some sectors where you believe the rate cut will take place?
That will depend on each bank, whether the bank, for our bank, of course, it's for ALCO to take a view, but we would prefer a more secular rate cut with the adjustment in base rate, because we have almost completed the rebalancing of the portfolios. The spreads we may not, but then it is for the ALCO to take a final decision.
Since we're on the subject of lending rates, first, Mr. Chaudhary, and you'll like this one, because of course most of the other banks since the beginning of this year have been mentioning that rates are going to come down and the trajectory is on the downward. We've had an SLR cut, we've had around 3 CRR cuts, almost 170 basis points. We've also had a repo cut of 50 basis points. But the translation isn't happening. On the lending rates, maximum of the banks haven't cut it as much at least. Even if you look at the short-term lending rates, your CP, CD rates have come down by 100 basis points in this financial year itself. Other than SBI, we've not seen any kind of translation from what's happening with the RBI or even on the overall lending rates coming down. Anyone other than SBI want to take that? Right, but on an overall...
actually means that the interest rates go down not just for new customers but for existing customers.
Right, but the average has come down by around 25 to on the max 30 basis points.
There have been sectoral reductions given over a period of time. If you look at the housing loan rates, all banks have slashed it, and wherever it has been slashed, some of us have reduced to the existing borrowers also. The question is that, as somebody said, that it's a question of selectively focusing on where do you want to focus, and the way the consumer loans that have come down of the both housing and the automobile, and even in the personal segment. So the benefits have been passed on to the customers in different ways.
Just to put it in perspective, because you said the CRR came down, A 25 basis point cut in the CRR amounts to a 6 basis point cut in interest in the cost for the banks. And 100 basis points, if most people don't borrow more than 4% on CDs, accounts for a 2 basis points. So when we gave 20 basis points, we actually gave more than our cost reduction, which will come over a period of time.
175 basis point cut in CRR in 2012.
So if you take the total amount, even if you take 175 basis points, it will come to 20 or 25 basis points. Please understand, total one basis.
Okay. So if you take the period that you're talking, if you take the period, then I know for a fact that we've cut it twice. And it has been cut by 40 basis points. So let's not mix the period. All I'm saying is the same thing as Chanda. When the costs have come down, it has come down. Please do not look at just isolated items, look at what is the impact of that cost reduction.
Shikhar,
and that's the base rate mechanism.
Because we've not seen too much of a rate cut for Axis as well.
I only reiterate what you heard from RBI, that it's a question of translating in terms of cost of funds to banks. And deposit rates have actually only just begun to come off. And so you're seeing the impact only on new deposits, whereas the old deposits are still carrying the higher rate of interest. So the translation into cost of funds will come over a period of time for banks, and that's when they have the ability to pass on that cost benefit.
So is it that Axis has not seen their cost of borrowing come down at all, or their lending rates haven't come down?
We have reduced lending rates for home loans and auto loans.
So new customers.
Minister in Delhi has said that he's not too happy with Reserve Bank not cutting rates. Were you actually expecting a rate cut before the policy?
Of course. I'm an incurable optimist, and I had expected a 50 basis point CRR cut, because I still hold CRR is a waste for the economy. So, but anyway, it has been cut by 25 basis point, and Governor had his own reasons, had his own compulsions to see the inflation down. But I do not think the 10 rate increases that happened in lower last helped in lowering the inflation, because today's inflation is largely cost push. It is not so much of demand pull. So to try to address that with rate of interest as an instrument may not be very helpful. So, but Governor has held out hopes of more expansionist or more accommodative monetary policy in the Q3 and the subsequent quarters.
But if you assume that today's CRR cut is of any policy, you're not going to see
as I see it, that it establishes the theory that it reduces the divergence between banks and other financial services providers. So it reduces the handicap, and it has been accepted that CRR is a powerful monetary tool and has an important bearing in the cost of funds, particularly the cost of lending to them.
Therefore, I just want to add that you should never assume that any step, including the step that's to be taken today, is of no use. I think each one of these steps build into the, building finally the cost of funds for the bank. So, as we said, the 175 basis points cut in CRR over 2012 has led to that reduction in cost of funds for the banks, which has enabled the banks to cut rates. Some have cut rates across segments, some like us have cut the base rate, and some of us have actually done a mix of the two. So I think each one of these steps leads to finally culminates into having an impact on cost of funds. But every step by itself may not be substantial enough to warrant a next day change in the interest rate.
Kamath sir, one question for you, and then I'll ask some of the other bankers this side as well, because the RBI is talking on the asset quality front, the loan restructuring. In your discussion with the RBI, did they express a lot of worry on the restructuring, as well as when it comes to slippages of the restructured portfolio? And also, bankers have been asking for dispensation, like you mentioned, on SEB restructuring and all of these special packages. Anything along that those lines was discussed?
The issue was that there is a concern on the growing asset quality deterioration, which cannot be denied. But it may not be at a stage that it is alarming sort of a thing, because it is not correct to believe that the entire restructured portfolio gets into an NPA tomorrow. If you go by the past records, 15% of the NPA for the industry as a whole, 15% of the restructured book has slipped into NPA. So if you can take that factor into account, it's not that alarming, though there is an area of concern. Now, as bankers, we will always ask for some dispensation on that, but the regulator will have their own concerns, because in case the banks come under pressure, it is better you prepare banks from the now itself. That is why they have said that why you make an additional provision, because when you are seeing the pressure, it is better you recognize. So their idea is that if a substandard asset you are providing 15% today, your provisioning for a restructured asset should be somewhere closer to that. So if you look at the NPRB, which we have to, diminution in the value provision, that comes to about 11%, and then the 2.75% what you are giving, it comes to something like 13.75, 13. So they say that on the restructured book, your provisioning should be somewhere closer to the substandard asset, that if it, in case tomorrow it slips, you are fully prepared for it. There is a valid reason from their side, but we also have a reason to ask for a dispensation, because there are so many pressures coming in, and you are expected to stand by your customers when there is a difficulty, and you are expected to restructure. So the idea is that if there is too much of a pressure put on this, restructuring should not become a sort of a disincentive to the banks. This is the point we made across. And the part that
did they agree to any special dispensation?
So you never expect them to agree. It is you are always putting across the point, and the agreement comes in some other way.
They agreed to hold a meeting, and in fact they have agreed to understand our viewpoint and have a common ground, because RBI is also a signatory to the Basel III declaration. So they cannot have asset quality classification norms which are way off the international benchmark. So they have agreed that within the next 1 month or so, there would be more consultation with the banks, and they have asked us to be represented at the highest level. So I think overall a compromise formula would be arrived at.
Consultations on...
Pardon me?
Consultations on
how quantify the restructuring, provisioning for restructured assets.
And this is in part only given, this 2.75. There is another thing is, those who have completed 2 years of successful performance, so that Mahapatra committee in totality will be looked into, and there will be guidelines. That has not been reversed. Quite a lot of banks are not reversed. So that point, now the requirement of provision will come down. This is currently all clear.
No,
so that is also is there.
I think the Reserve Bank said that for the financial year ending March 2013, they will come with a guideline. They were ready with it because some of the banks have already now declared the results. They said that the new guidelines will be made made applicable for March 2013 quarter. Next quarter. The idea is that you will wait for it. But what they said is that the accounts which have successfully completed 2 years after restructuring and adhering to the repayment schedule may be upgraded, and to that extent there can be a provision release which can happen. So they will come with the guidelines for the March 2013 quarter.
But sir, they are sticking to that 3.5% for the after the first year and 5%. They are sticking to that.
They have not announced anything today. They said 2.75 today. And they also said that this reversal or the considering a standard restructured account to be taken out of restructured book after 2 years of successful completion of the repayment is under consideration, and they are issuing these guidelines for the March quarter.
Another issue which a lot of banks showed in their results is the stress on the MSME sector. It's a common feature with several banks. Was there any special discussion with respect to, some consideration or some concessions? We've noticed it in several banks.
I think we will work on this. Probably you can ask the governor on this matter.
The deterioration was acknowledged. And in fact, again, another meeting would be called to understand, because the governor was wondering whether these issues receive enough attention at the CEO level. So we have been asked to come back with more detailed understanding, I would say, of the challenges in the MSME sector.
But what are they considering? Will they give some...
They will hear us and then formulate. They will formulate.
What dispensation are we taking for SEB restructuring, or should it be completely ruled out after?
I don't think that we asked for any dispensation on SEB restructuring.
Or any dispensation?
We didn't ask that. We only said that there's a reason for us to look at these issues very closely, because restructuring is a need of the hour, looking at the economic downturn, and we may have to support the customers during this period.
What about infrastructure? Because Mr. Chaudhary had also sought this dispensation from RBI regarding the projects which have crossed the date of commencement.
So that again will be a subject matter of a discussion, and guidelines will follow.
So there is a chance that we will be allowed to...
will be heard. No, will be heard, and possibly they would make a differentiation between different delinquencies. where the interest, maybe the project has been delayed, but the interest is being serviced, and where the interest is not being serviced, of course, is NPA. So some forbearance might be possible.
Governor, in its policy, has mentioned exchange of information.
I think the issue is really that because we moved away from consortium lending to multiple lending, that do we have adequate systems for sharing information on loans that are being given by different banks? So that was the discussion around sharing information and looking at what could be the most efficient way of doing that. Credit bureaus have helped a whole lot on retail credit. So is there a case to look at doing something like that for non-retail credit?
So some exchange of information already happens, because I think in each of the banks in the proposal for the directors there is a column that none of the directors are appearing in the RBI defaulter list, because RBI maintains a defaulter list which is upgraded or updated every quarter and circulated. And then again most of the banks would have a negative list of people appearing in the ECGC caution list. So it is not that nothing exists now and everything needs to be in place, but how to make it more dynamic, how to make it more contemporary, that's the issue in my mind.
I'll add, in fact, under the consortium, there is a proper formal way of sharing information, which was given a go-by when we moved to the multiple banking. Somewhere about a year back, RBI came with a guideline of desirable flow of information between multiple banks, though it is not mandated, it was a desirable. So the RBI now said that there was a question you asked, what happens after 1st January? The answer is that it is better you follow this desired thing. And after 1st January, don't get into lending without exchange of this information.
Is it more for the
What kind of penalty?
No, but what? It is wherever more banks are involved.
That is the point also was discussed. Currently already 4 organizations are there, so they should be fully utilized apart from sharing of information.
Mr. Narendra, since since you have a very large gold loan portfolio, substantial gold loan portfolio, the RBI today has banned funding for golds. So, how do you see the further cascading impact on the gold loan industry?
No. Gold loan should not be given against gold.
Yeah.
Loan can be given against jewelry.
Yeah.
And whatever portfolio banks are having, it is loan against jewelry.
No, I understand that.
And another thing they mentioned, loan for working capital can be given. Other than that, and the further guidelines are expected. So that point, the loan against jewelry giving to the agriculturist and other commercial use, that is there is no harm.
That is there, but